Hello, everybody. Welcome to Trade Masters, the Redux. That's what this is. I
Round
think we
two.
lost my screen share here. Give me 1 second to get back in here. I don't know what happened there, but technical difficulties.
The
All
wonders
right, you
of
should be able
live
to see there.
programming, right?
Yeah. So yeah, exactly. So last week we tried this, Coach Frank and I, and we had a tie, which I'll be honest, never had that before. I think that is a tackle first. So
I, I believe
this week we've come
so.
back with three more picks each, and we're going to share them with the crowd, and you guys are going to vote. We have a Delta round, a Theta round, and our always favorite, the wild card round, or as Frank so aptly deemed it, the lightning round. So as always, we want you guys to participate. So we'll put up the poll at the end of each round. You guys can get in and vote. Pick your favorites, pick your favorite coach, pick your nose, pick your friends, whatever you want. It's all good stuff. Little shout out to our good friend Matt over in the Discord channel. He's always watching us and judging and being awesome. So we're glad to have him here as well, and welcome everybody out for this. So without further ado, Frank, since you were the challenger last week, I am going to throw the floor to you again. What do you got for Delta round, my friend?
All right, all right. Well, let's see if we can break the tie right out of the gates here today. I mean, it was bad in the market today, right? A ton of selling. There's a lot of bearish setups. Most of the retracements, are kind of they went right. But I'm looking at a breakdown on UPS. This is one that I think, independently of the market, is a very clean and interesting breakdown candidate personally. And I think there's going to be some fun things that we can do with these characters. We'll let your screen come up there. Yeah, it's there you go. There you go. As you can kind of see here, we had that support level developed back in October, right around that 175, 180 marker, worked our way back up, even tried to break out, failed that miserably. And now here we are breaking the low end. It had been a little bit choppy at that support zone the last couple of weeks as it kind of battled that out. But I think today's candle kind of clears out at least some, if not all, of that wiki stuff or nonsense, as Maddie would call it. The thing that really stands out to me on a UPS is there is just a big, in my opinion at least, wide open window until we get down into the 150, 155 ballpark. That's where we're going to have that next level of support in the form of some old resistance. That's also where the 200 weekly is, which is kind of the big thing that I will be looking at. That'll kind of line up with that old support zone. It wasn't a tremendous amount, but it was definitely a little price action there. So a pretty good window to the downside to work with here on a UPS. Now, at this price tag, probably going to be looking at some sort of an option play, right? And so I'm just going to be looking at, with these market conditions, it's really very difficult to just buy a put, right? I mean, it's just doesn't work. And I don't know why you'd want to do it anyway. So I will be looking at a spread here. I'm going to actually look at the Junes here, Greg, and I'm going to be looking at the 170 by 155 contracts here. I've got
Buying
that
the 170s,
buying the 170s, selling the 155s. I kind of have that as 155, kind of in that 200 week moving average, kind of that target location, if you will. And this is going to lead me to a fairly inexpensive, on at least a per share basis, trade, right? While still having a lot of upside if we do get that move down into the 250 range. And quite honestly, I don't see, at least as of right now, from a purely technical point of view, we all know anything can happen, but I can't see any reason why it doesn't work back into that old or into that 200 week moving average. So I like the upside that we're seeing here. We could pick this particular spread up for what, somewhere in the general ballpark of 375.
375-ish. Yep.
Yeah, so somewhere,
379.
yeah, so somewhere in that general ballpark. So under $4 on a $15 spread on a bearish breakdown on a stock that's really not participated in this recent market rally all that much, right? It's been struggling for quite some time. We've got earnings behind us. We've got a clean support break. I mean, we could play this a little different directionally speaking, but I kind of like keeping it, on a per share basis, really low risk. I think the spread allows us to do that while still opening up the door for some pretty good movement if we can work and fill up that little window there.
Right on. So you would be entering this trade if it got below the low of today?
Yeah, I think
That's
you're
the
just
plan?
looking. Yeah, I think you're just looking. This confirmation is just going to be below today's low. So what was that? 171.52. We'll call it 170,
Yep.
150. But basically, whatever an individual's rule would be, right? Below, that number plus, your 10% ATR, 20% ATR, whatever an individual's rules are, that would give us the follow through. And I would be ready to rock and roll on this personally if we do get that follow through.
Yeah. Yeah. This looks heavy to me. It's broken down a couple of spots here. There was a pretty important support level around the 180 there. It failed that on the weekly chart. It's below the next one. So yeah, this there's nothing that looks pretty about it. And then you take into market conditions. Yeah, it's just heavy. It's like the rest of the market as far as I'm concerned. It's all just very, very heavy right now. It's
Yeah.
having a hard time holding up. So yeah, great trade. No issues there. I like your setup. The only thing that I would mention, do you have a stop loss on this, or do you just let it go because you're
Yeah.
happy with the risk?
A mental stop loss. Basically, as
Okay.
long as this stays below this little, it was a little very subtle, but you had a little double top kind of form on May 10th and on May 17th, right around that 20-day simple moving average. If it were to close above that, I'm not going to put a stop loss on, but if it closes above that, that would be a place to manually close, take the loss, not eating into the max loss. That puts us right around 185. But in these market conditions, I prefer with spreads in particular to basically let the spread be my stop loss, identify on the chart, hey, if I see a close above this area, I'll manually get out. And while I lost, I didn't lose the max amount. I will lose less than I anticipated if that's what happens. But yeah, right in that 184, 185 range. But I want to see it close that personally. That's how I would look at it from a management point of view. I think that is the level that stands out to me. Hey, if we take this out, maybe this is a fake down, right, and not a breakdown. That would be a little bit of a positivity in the price development. It's been a heck of a long time since these guys have broken any resistance, right? We basically have to go back to that breakout in early February, probably. Maybe we could say it happened in March, but it's been a while since we broke resistance. So I want to be involved as long as they continue that particular trend.
Right on. Sounds good. Yeah, looks good. Looks heavy. And yeah, for me, I like kind of having those mental stop losses that you talked about, because now you're trimming your loss from $379 down to say 230, 235. And I think for a lot of people, that's within their pain threshold. And that's really the key, I think, as far as I'm concerned, is just know what your pain threshold is, stay within it.
Yeah.
And that way the market's not going to bite you that bad at any point in time if you're clear with the risk. So yeah, good deal, man. I like it. I'm going to go with a bear put as well. But what I've noticed lately is retail in general, and this includes big box stores like Costco, like Walmart, like what else was there I saw today?
Target, it's disaster.
Yeah, all of it's just been ugly. And you can see here that Home Depot just had their earnings, had a little pop. It failed right at that 50 moving average, failed back down again, and then of course gap down today. And we're sitting right on this 280 level. You can see that I've drawn a white line here. The reason I've done that is because if you look at the 3-year weekly chart, pretty clear resistance. Resistance over here, new support here. Very aggressive downtrend here. We got all the moving average crossovers that you would expect. And we're sitting on a shelf as far as I'm concerned. If we lose this here, I think you make a very quick trip down to 260 because of the rising weekly average. but really the next support could actually be around 255-ish.
Yeah.
So somewhere in the neighborhood of 260, 255, I could see a very quick trip for this down that way, especially when you add in all the weakness, that we're seeing. And again, the retail sector is just, with Walmart's earnings yesterday, just got absolutely trounced, and then had some follow through today. All of this stuff feels heavy. I've actually got another retail trade here that I'm going to bring to the table a little later, and it all looks ugly. None of it looks pretty. So for me, I like this downward movement in Home Depot. If it holds up here, there's no trade. You got to get below this 280, this low here. If it doesn't get below there, just leave the trade alone, because it's probably going to trend sideways and maybe try to make another run upward. So this is really dependent on whether it breaks at 280. Now, having said that, we're at $285, but this is a $13 ATR. So literally that could happen in the morning, right? So you got to set this trade up in advance. You got to be ready for this. So the trade I like the best. So short-term bear put here, just going out to June, 30 days, not that long. I like buying the 280. So again, we're only getting into this if it breaks 280, right? So I want to buy the 280, and I think it can at least get down to 260 here, right? $20 spread, costing you about $5.95 here. You might have to pay $6 for it to get in. But what I like here, $600 is probably a little bit much for folks. It's even outside of the pain threshold that I want to use. One of the things that I think is important in this market, and you'll see this a lot in the trades that I bring to the table tonight, is you got to be nimble in these volatile markets, these bear type markets. You got to be nimble with your trade. So normally when I'm doing a bear put, I would give myself a lot more time. But the reality is these markets are moving fast. If it gets from 280 to 260, I'm going to take whatever I can get at that point. I don't need to sit there and wait the full time to get there. And it's a $13 ATR. So it literally could happen in a couple of days. Right. So this is the trade I like the best. So even if you just left it, you just set it and forget it, you're risking 600 to make 1,400. So you're 2.2, 2.3, something like that times, which is decent, right? I don't think you got to sit there and let that bake away. I think it's good to have a stop loss in mind, whether you do it mentally, with a close, or whether you put it in ahead of time. Either way, I think it's fine. I'm going to use the 300 price level here. I thought about going a little bit higher. I thought about going to 315. I don't think if this pops above that 20 moving average there, I don't want to sit through the rest of this personally myself, especially with the shorter term trade like this. So I picked 300. It's a nice round number. People pay attention to it. So 300 stop loss there. So you're looking at about 250, maybe as time goes by, you might get to that 300 range. So risking 300 to potentially make 1,400 if it went to expiration. Even if it didn't get to expiration, you're still if you got there tomorrow, if you got to 260 tomorrow, you're at $800, right? So you're risking 300 to make 800, minimum, and then time's going to help you out with this. So provided it gets in the right range. So Home Depot, as far as I'm concerned, again, all the retail not showing any signs of life. I know this isn't your garden variety retail, but it's acting just like the rest of it. So break down below 280, simple bear put spread. Potential for a pretty good gain if we did get the full Monty here. Risk 300 to make 1,400. That's good in my books all day long, right? 400 4 to 1, sorry. 4 plus to 1. So that's my bear put right off the hop here. It looks ugly. It's not giving me a warm fuzzy feeling for any of this stuff right now in this market. So.
No, and that's an ugly chart regardless of the market, right? And then you throw that in, and yeah, I could see why you like that breakdown. I absolutely can see that. That's a nice choice, Greg. Well, Tan, I guess we can officially get the vote up and running. Let's see. They're fairly similar technically, I would say. Not tremendously different charts. Be interesting to see if there's something that stands out to the team on one versus the other. And it'll also be interesting to see if we can repeat our tie. We didn't just tie, Greg. We tied each round. It's not like you won Delta.
We tied every one of them.
Oh, yeah. We tied an impressive feat. Well, I like it, sir. I definitely like that one. while we give folks a
All
chance
right,
to vote,
sir.
let's dive on into it. And Greg, when
Yeah,
I
let's go
Oh, I
ahead.
was just
Yeah.
gonna say when I talked to Greg a little bit before the show started, I said I was gonna go with MRO, but I'm gonna call an audible on Theta around here, Greg, and I'm gonna go
All right.
with WDC for my Theta round play. This was actually one of my favorite swing trading setups. It was in rapid fire this past week, so I think we could look at it from that point of view as well. But at this point, you probably wanted to catch that retracement. Now you're probably looking at the break of 63 and change for that directional play. But this is, a tackle 25 DSM stock, right? Something that, I believe in. I know that probably I'm not alone in that regard. So good, strong stock. It can move a little bit, right? That's why it's on the DSM list. But I'm kind of looking at these guys. If I'm not participating, I really like the bottoming pattern that we've seen over the last couple of months. Then we had that big pop on earnings, that gap fill on earnings. Now we're rallying back up. We're still, however, in a spot where we can get some reasonable premium on the naked puts going into June, which is what, 30 days? I think it's exactly 30 days out right now.
Yep.
And as long as it's a price I'm willing to work with, I'm going to be really interested in that. Now, I was looking at the 5250s, Greg, for a couple of reasons. Number one, it's below that low point that led to this move that we've seen over the last week, right? So that low on the 12th, that little support level ended up being a place where buyers really came back in. So number one, the strike price is below that. So if that just holds up, if these guys run, and I wouldn't be very shocked at all if that's exactly what happened. Heck, even in today's market, they really held up, pretty nicely. Bring in a little bit of a cash flow. Number two, that's going to get me the 200-day moving average as well as that rising 20 that are working with it right now, as well as it's going to get me below all the stuff on the weekly chart that I look for. That would get me below the weekly 9 that just now over these last couple of weeks crossed back above the 20 and the 200. So I've kind of got the moving averages on that longer term time frame that I like to build around as well, which is kind of why I liked the 5250 and kind of gravitated toward that 5250. That thing's going over $1, what, $1.12, $1.14, if I recall when I looked at it just a little bit ago.
Buck
Yeah.
18. Yep.
So probably can get in there at very liquid, right? Easy to work with these guys. Probably can split the difference pretty easily on that. As long as you're willing to take ownership, right? That's always the key when it comes to a naked put. Are you ready, willing, and able to take ownership, right? If not, that's okay, right? We could always, if we're that interested, we could always spread it out and get that risk controlled. But I'm looking at the reversals that we've seen. I'm looking at the momentum that we have been building. I'm looking at, if these guys just chop while the market's throwing a fit, I wouldn't be that surprised, right? And so if there's a way that I could maybe profit off of a little time decay on a reasonably priced option, not insane, but I would say a reasonably priced option, something I would be interested in. So that's why I made the audible to WDC. I like the support zones and I like the price, all of the stuff holding us up, if you will. You could look to wait for the breakout as confirmation if you wanted to. I don't think you have to do that, but of course that would be better confirmation.
Fair enough. Yeah, it's one of the few stocks that is holding up. A lot of other stuff getting trounced. Yeah, it looks good. Little pullback today, but not a big deal there. Yeah, I like your cushion that you got here. You're far enough away. And honestly, if all of these technical factors broke, do you really want to be involved anyway, right? So at the end of the day, yeah, I think that's fantastic. Yeah, it's been really, really challenging to find something that's holding up. I've actually got one that I will be throwing out later that one of the only green things in the market today. So I'll be throwing that out to my wild card round. So yeah, I like it. The risk reward is pretty decent, especially if you're willing to take possession of the stock. If not, you look at these things, if you're not willing to take possession of the stock, pick a stop loss.
Yeah, you can set
Pick
a
an
stop.
area on the chart.
Yeah.
54. Like if it got below all that
Yeah,
stuff
if it
there,
breaks that
if
stuff,
you get
buying
out
it
at
back.
50, yeah, if you get out at 54, it costs you $150. Not the end of the world, right? So
Right.
that's if you got into it tomorrow, right? So yeah, good trade, man. Like it. Again, it's one of the few things that's holding up, and it's hard. It's hard not to gravitate towards those when the market is getting so beat up, and there are things that are holding steady. So
Right. You have to be
yes, good
impressed.
trade, sir.
So appreciate it. What
Good
do you got?
trade.
What do you got for us?
Well, you pulled an audible, so I'm going to pull an audible as well. I was going to go with Marathon, which I think is fantastic, but I got one that I think actually might just might be a little better for this particular market. Abbott Lavatories.
Oh,
All right.
okay.
A lot of problems going on with this here. This is kind of a sentimental, fundamental kind of thing. Abbott Lavatories making baby formula. Had some problems not too long ago, if I listened to the news correctly. Anyway, tried to rally recently. Got even past that 20 there, and then put in this little red candle today, and just closed below that, just below the 20 moving average there, 20 period moving average there. So my thought process here is, obviously it's been down. There's still negative news overall. The markets, it's the market stuff right now. And what really made me gravitate to this particular trade here is this line that I've drawn right here. Okay. Support.
Right.
Failed support. Tested resistance there. Tested resistance here. Failed both times. It looks to me like it wants to head down again. With the weakness of the market, I have no reason to believe that it's just all of a sudden magically going to take off. Now, could it? Sure, it could. But that's why I'm not playing this more directionally. And this is why I looked at this as a theta trade as opposed to, a delta trade, because I want to give myself that little bit of cushion. Maybe it trims sideways. Maybe it just comes down for a few bars, right? Pulls back down and then attempts another breakout. I don't want to put myself in peril there. So I think for a theta trade, this is much better setup. So what I liked here was a bear call, an out of the money bear call here. Because again, I don't know that it's going down much more. I think that's kind of where I'm leaning to, but I don't think it's going to go up exceedingly, a lot either, right? So at that point in time, that's kind of what I chose. So for me, I was looking at the 30 days out. I'm looking at the 120. So I'm selling the 120 and selling the 120, buying the 125 for about a 71 cent credit there. You might not get all 71 cents. I'd be happy with anything over 65, to be honest with you. You got a $5 spread there. So we only really need 50 cents and we're getting an extra 15. So I'm pretty happy with the return here. I would probably shoot for 70, right? You're in the mids there.
Yeah.
There's lots of volume and open interest. Like there's tens of thousands of contracts here. So this will actually tighten up during the day anyway. So I like this trade. And the reason I like it is the 120. We look at where the 120 is, right? Same as the trade you had. Look what I'm clearing out, right? Clearing out the 50, clearing out this major, support resistance level that it's on there, right? So I've got some cushion out there. I've only got that right at the 120 there. So if it got beyond there, well, I don't want to be involved in this anyway, right? If it gets beyond the 50, and starts working higher, to even break this stuff here, I don't want to be involved with it, right? So for me, this I think is a nice little theta trade with the whole market leaning bearish. I could see more downside. Now, there is a caveat with this trade. If it doesn't go lower tomorrow, this is a no-go. So it has to open lower tomorrow. It appears like it's going to do that, but this could change the bid ask overnight. But I want to get in when it shows me confirmation. So below the low of this candle, 112-ish, in that ballpark there. If it continues down, that's when I want to get involved here. If you can't get the 71, if you get 65 because it's moved a little bit, like I said, still very happy with that return. Very, very good return there. So my expectation is there's absolutely no reason why this thing can't get back to 105. That's pretty much the credit spread that I like. You could also, for exit strategies here, if it gets down to 105 and the time hasn't ticked away, like this is a $3.64 ATR. It only took 4 days to get up here. If it takes 4 days to get down, I would probably close that spread out if it bounced off the support here.
Makes
Take
sense.
the money and run.
Yeah.
Easy money at that point. So
exactly. I like it, Greg. As a matter of fact, when I was going through my watch list this afternoon, kind of thinking about who I might want to talk about, I actually priced that one out. I was considering them. So you've just pushed me over the edge and going into tomorrow morning. I know what will be on one of the things on my to-do list. So I like it.
Good. Well, we broke the tie.
We did.
You won the first round. The kids like the UPS better, so.
And see, we'll see. I'm going to make the assumption they're going to like your theta trade better, so we're back to a tie. But you never know. You never know. We'll let.
Well, at least we didn't tie every successive one, right?
It's progress, right? We'll take the win.
Yeah, right on. So if Tan can put that poll up, which he has done very, very quickly. Thank you very much, Tan. WDC versus Abbott Lavatories, nice little theta trades. You know what? 4 winners as far as I'm concerned so far. What do you got for the lightning round, my friend?
All right, lightning round. I was really tempted to go back to my weekly spies that I did last week, but I'm going to mix it up, and I'm going a K trade on ONB. I think these guys are shaping up really nice for a K trade candidate where they've got a very clear top and a very clear bottom. They might be in this range for a while, but sooner or later, they are likely coming out of it, right? And the signal is going to be the break, whichever way it might be. Break above resistance, that would give you a signal that it wants to come out to the upside. That'd be a nice looking little double bottom pattern, maybe even triple bottom in this case, on the other end of it. If it works its way back down and then ultimately through that support level, it'll just be a pretty clean breakdown candidate, right? So this is one that I don't know which way is going to go. I don't know who's going to win the fight. Are we going to break above just a little bit above 16? Because the nice thing about the break to the top end is if we break that, we're also getting above the 50-day moving average. And so they're really close to one another. But I would say from a entry signal point of view, I would want to be above the 50. Right, as far as an entry on the bull side of it. On the bear side, below 15 is where I have that. For ease and convenience, I'm going to call it 16 and 15, but do note that it would be a little bit above 16 on the bullish side, getting back above that 50-day moving average. If we break to the upside, I think this is probably risk to reward wise preferable in my opinion, because I see a pretty clear path into 17. There's really not much. That is where we're going to start approaching that 200 day as well as the 200 week moving average, but a nice little window from 16 into that 17. So a nice dollar to work with, which means I can go as low as 50 cents on the stop loss. I don't have to go that low. We'll talk a little bit about that in a minute, but I can go that low and still have 2-to-1 on that side. On the other end of it, these guys do have some old, and it was just really just once, but it was a really big turning point. You have to go way back into 18 where they got into 14. I want to say 1445 was the low point, and I think we want to respect that specifically as a target one, if not our overall target. So a little less upside if it breaks to the downside before the first real challenge. The nice thing is if that gives out, there is just a whole lot of nothing for a long ways. There's really nothing until you get to like $12 beyond that last line in the sand at about 14.50. So from a stop loss point of view, so my entry signal, I just got to wait, right? That's the nature of the K trade. Sooner or later, it's going to break one way or the other, and I'll look to be involved with the winning side. 17 target on the upside and 1450 target on the downside. For the stop loss, you're going to have really 2 options. Option 1 is what I'm going to prefer. It'll just depend on what it looks like when it happens. If I can be below the 9 EMA, if it breaks to the upside and I can get my stop loss below the 9 EMA and still have 2-to-1 risk to reward, that's where I want that stop loss. Same thing if it breaks to the downside. If it breaks to the downside and I can get 2-to-1 with my stop loss above the 9 EMA, that's where that stop loss is going to be. If that is not the case, right? Because I don't know how it's going to look when it breaks, whichever way it breaks, that might not be the case. I'm just going to, I want to make sure, I'm below the breakout channel or above the breakdown channel, right? And just want to make sure I am at least 2-1, whichever way it works out, right? So ideally, we're using the 9 for our stop loss on either side of the break. But as long as I am 2-1 on either end, I'm happy. In those scenarios, we can go intraday, use the previous day's high. Again, it's hard to say for sure without knowing what it looks like when that happens, right? So the stop loss is going to be a little up in the air. Ideally, the 9's working for us, and we can easily use that as the stop loss. But that will take we'll just have to see how it looks when we get there. So going to be a watch list candidate until we break. But a K trade's where I'm going, Greg, below 15 for the bear and above 16, a little bit above 16, specifically above the 50-day moving average for the bull.
I like it. Yeah, it's not always easy to find these patterns that are really, really defined like this. So yeah, I like it. Now, my only question for you, Frank, would you set your orders up ahead of time, like at the price levels, or would you just kind of keep it on the radar, keep maybe some alerts going?
I think it's going to be up to the trader and their rules. So for me, for example, on the top end, I would need to see it close above the 50-day moving average, right? Most folks at Tackle Trading know that that's my rule. It's got to close above the 50. So on the upside, I could not do that, right? Because the close is what will be important on that side of it. On the downside, I don't have to worry about that same thing. So it would really come down, I think, to the individual's rules, and not so much you have to, you can or you can't, or you should or you shouldn't type of a thing. I think it would really come down to how aggressive you are in your entry rules. Whenever I'm dealing with a moving average, I always have to close it. That is just always my rule. All right. Sometimes I complain about it, but I always stick with it. So
rules work. That's the reality of trading. So yeah, good pick. I like it. Like I said, I really love the pattern. It's not easy to find things that are this clean, especially in a volatile market like we have right now. So yeah, good deal. So we're tied again, my friend.
Yeah, I was gonna say no pressure on this next one, but the conspiracy continues. We're tied again.
Yeah, I think Coach Matt's gonna lose his mind if we tie on the next one, but that's okay. All right. So I found the one stock in the market that closed green today.
Ooh,
okay,
right.
It didn't close green by much.
Hey, green is green, right?
4 cents up today. Couple of reasons I like this. Obviously, showing strength in a weak market. Okay, that's number one. It doesn't matter what kind of market you have. You can have a completely bullish market. There's always going to be bearish trades, and the vice versa. If it's a bearish market, there's always bullish trades. It depends on the setup. It depends on what's going on. Gilead Sciences has absolutely been bucking the trend. And for me, this is about as textbook as you get for a cup and handle. Like, look at this thing.
Yeah,
it's
nice.
The handle's half of what the cup is. It's just beautiful. And more importantly, this is what I really liked, was look at the support here. Stuck the landing 2 or 3 times before it broke down there. So this like your trade there, nice and orderly and clean. This was about as clean as I could find in the market today. That beautiful cup and handle. I like the fact that we got some room between 64 and 66. Now that doesn't seem like a big move. That's only an ATR and a bit. Okay. Here's my thought process in these market conditions. Okay. These market conditions are wild. The volatility is swinging. There's big moves on both sides of the game. We could get a dead cat bounce in the indexes very soon. We could get more downside. Everything's moving faster right now. And for that reason, I want to be fast in my trades. I'm not looking for this thing to get back to 74. It might eventually get there. I won't be in that trade. This is a swing trade. I'm looking to clip a couple of points off here, and those couple of points would get us right to a known support level, an older one, and right to that weekly 200, that daily 200 moving average there.
Right.
So for me, quick little trade, and my trade here is going to reflect it. I don't want to be hanging around in these trades. I want to get in, I want to get my profit and get out. That's ideally, these market conditions are dictating that. That's not me. That's not me choosing that. That's the
Right.
market
Just
telling
market.
me what I
Yeah,
need to do. So love the technical setup here.
absolutely.
Now I looked at a couple of different trades. I always look at a couple of different trades. I looked at the bull call, very simple bull call. I did not like the way it's set up. It was okay, right? It wasn't the best. Okay. What I didn't like here as well, I went to the 17th of June because I like the options. As you can see, there's a boatload of liquidity. Okay. I didn't like the fact that we had 2.5 wide spreads. So what I did was, again, knowing that I'm going to be in a short-term trade here, I went to the 23 days out, the 10th of June. Okay. So a very quick, like I said, I'm looking for a quick turnaround here. I'm looking for a breakout, looking for a quick run. Okay. Because like I said, it's only an ATR in a bit. So what I wanted here was I wanted the dollar wide strikes. Okay. So I looked at the bull call. The bull call was going to be about 70 cents per share or $70 per contract. That was okay. For a $2 spread, those numbers just didn't throw me. So what I looked at instead, that's right. It didn't jump off the page at me. So what I looked at instead was one of my favorite trades, especially in these environments, broken wing butterfly. Okay. When I do a broken wing butterfly, I look at where I think it can go. Okay. I look at where I think it can go, and then I build it out from there. Well, I think this can get to about 66.50, but I'll concede that it can get to 66. So what I did was I sold the 2 of the 66 here. Okay. I want to leave this open. Okay. Because I don't know that when it gets to this 200 moving average here, whether it's going to turn back down. It very well could, or it could blast off. If it blasts off, I still want to get paid. So that's why I chose the broken wing, which meant my strikes, I'm going to buy the 67. Okay. And I'm going to buy the 64. Okay. So this gave me a debit of 49. Yep, that's the right ones. So it gave me a debit of 49 cents. So let's look at this on the Analyze tab. Let's make sure I've only got the right one here, and I do. So what I liked about this was I'm risking 49 bucks, which is usually within most people's wheelhouse. Okay. If it pins in 23 days, I could make 3 to 1, 150 bucks. Okay. That's if it pins right at that price. If it's anywhere in that ballpark, it's going to be, 2 to 1 plus anyway. And then if it takes off to the moon, I'm still getting $51. So I'm getting back more than I'm risking. So I'm at least getting 1 to 1 and potentially 3 to 1 on this trade. But my risk is $49. Okay. In these markets where we don't really know what's going to happen, they're very fast moving. I want to be taking very, very little risk. Okay. Let the market work itself out, get back to some conditions where we can start to do, the real kind of, trading and getting more involved, those kinds of things. I know myself, I've been pulling back from the markets little by little here, waiting for it to kind of get through, its demons, if you will, so that we can get, more involved. And right now it showed us again today, that's not happening right now. So again, for me, taking very, very little risk here. I still like the reward of 3 to 1. I did actually put a stop loss on this. And again, you could use a mental stop, or you could actually put a real stop in. You can see that I drew a line here down below the 2 moving averages. That wasn't really far enough away from me. So I went even further. I went down below all 3 moving averages here. My stop loss is going to be at 60.50. Okay. So like I said, if it goes up, I make 51 bucks, potentially 150 at 60.50. I'm risking 25 bucks, right? Potentially maybe 30, as time passes. So now I'm risking 30 to make 150 potentially. That's 5 to 1, or 30 to make 51. So about 1.5 really. Okay. So, using a stop loss that, again, in these markets, if it gets down this far, right, that would be in the neighborhood of, an ATR and change, right? If it gets wild and it gets below that 50-day moving average, there's no more support down here from those moving averages. So I wanted to get right below that as a stop loss. Again, I think the way you talked about your first trade, a mental stop loss, a close below that 50 moving average would be a time to tap out of this trade. Or if you're not as an active as a trader, for 49 bucks for a contract, you could set it and forget it and see what happens. So again, my whole thesis here, it was the same as last week. Low risk, get involved, have the potential to make a decent return, but don't bet the farm. That's kind of where I'm at.
Yeah, at 100%. And I think that's the sensible place to be right now. Keep things small, and that's always the eye of the beholder, right? But we all know when what's small to us. I think that's great advice in this market in particular. And I think most traders, myself included, that I know have we've kind of went there, right? So I like it, Greg. I like it. Now I'm real curious as to. I feel like I know the audience. I feel like you're going to win this one. I think the audience is going to like the broken wing butterfly more than the K trade. That's what my gut tells me. But we will have to give it an official count to see where we go. While we do,
all right,
Greg, anything else?
I'm going to give the bonus trade. I did this last week. I'm going to give the bonus trade.
All right.
So when I was talking about retail, okay, retail has just been getting trounced. And another one here that was getting trounced, Abercrombie and Fitch here. Ooh. Okay. So yeah, this thing tried to make a run. It started to make some higher lows and higher highs. Sorry. And kind of hit that 200 and then just faltered and has been falling ever since. Well, again, almost a perfect double bottom today, right around this 30 mark here. Big red ugly candle today, just like as we talked about, Walmart just getting destroyed. Target, I didn't even look at it today, but like just getting absolutely destroyed. Anything to do with retail was just absolutely getting destroyed. So I really like the way this hit today, and it looks like it wants to drop a little tomorrow. It might pop a little bit. If it gets below here, I think you get a very quick trip down to 26.5.
Right.
So when I looked at this trade, you're only entering if it gets below the low. Again, you got to have that confirmation. I'm not interested if it just kind of drifts here. I need it to get below there. But if it does, like I said, I think you get from 29 to 26.50 in a hurry. So I looked at a trade here, very simple. Again, not really trying to reinvent the wheel here. Little bear put, going out to 30 days, buying the 29, selling the 26. So you're looking at $1.05 debit here for $3 wide spread. Okay. Now, personally, 3-to-1's okay, right? Or sorry, not 3-to-1. A $3 wide spread, it's paying $1.05 for it is okay. You're basically looking at $1.67 to 105 or 133 in this case. Because I have too many trades on here. That's why. That's anyway why it looked weird. So the 105 there. Yeah, now we're there. The 105 is still too much as far as I'm concerned. So like I don't want to risk 105 to make 195. It's fine, but for me, I think you could put a stop loss in here anywhere above one of these moving averages. I picked 33, so you're above the 50 and the 9 here. And so if we look at 33 here, if it got up to 33. I would tap out, and you're looking at about 40, let's say time passes, let's say $50, right? So now you're risking 50 to make 195, potentially 3, almost 4-to-1 there. So for me, like I said, with the way these markets are moving, if it popped up as much as it did and took me out, I wouldn't bother me because I could lose $50, much like the butterfly trade, and not worry about it too much. And if you wait for that confirmation to get down, I think the odds favor a run down to that next level of support as opposed to a bounce.
Yeah.
So that's more retail carnage.
Yeah. So there's lots of it out there. Yeah. That's nice. I'll have to throw that one on the watch list. And Marie said it best. She said, Frank knows his audience. I knew as soon as you broke out the broken wing, I knew it was unofficially over. But that's all right. That was a good trade. I like all of them. I like that ANF for sure, Greg. So, well, we didn't get the tie, sir. In a way, I was hoping for it. In a way, I was kind of hoping it would happen again because, but lightning doesn't strike twice, right? So we'll have to be.
I wanted to just see if we could do it.
I know.
I just didn't know if we could
I
pull it
know. I just
off
wanted to
again.
see like if we could pull off a streak, right, of like 6 weeks in a
Yeah.
row. Really build it up, right? But
Yeah.
the
Coach Tyler would be losing his mind. He's like, I want in there,
yeah, he's probably
So
sitting in the room right now and just can't get let in. But some good trade setups in
yeah.
that, Greg. Definitely a couple to add to the watch list, and I think it kind of illustrates there's always things to do, and as Coach Greg pointed out, and I know I know our team, I know the folks are already doing this, but keeping it small, keeping it manageable, keeping active in the markets is always important in my opinion. But we don't have to plant the flag, right? We can take a little, little
No.
debit trade on ANF, or a little butterfly trade, or a small K trade. I mean, we can keep this risk really, really controlled. And that's exactly what I hope all of us are doing. I expect that from everybody here at Tackle Trading. No doubt about it. Well, Greg, it was fun as always. Always fun
Yep.
hanging
Yep.
out with you. I'll miss you next Wednesday, but you know, uh, if you pull the win next week, and I'll lobby for a rematch.
Rematch. Well, it's like wrestling, right? We're always bringing back the good guys and the bad guys. So
Exactly.
we'll meet again, I'm sure. But yeah, thanks, Frank. I love this. Again, this is one of the highlights of my week. I love the competition. I love the folks that are out there watching this and voting for us. So big shout out to you guys. And shout out to Coach Matt as well in the Discord channel. He's always fun for you guys out there as well. Couple of notes here. If you're new to tackle trading, if this is the first time you've seen it on YouTube, head on over to tackletrading.com. We got a 15-day free trial. You can come check us out. We do all sorts of content, scouting reports, which we absolutely love to do. We got Trade Master, we got Trading Labs, we got, you name it, we got it. And we're producing more content all the time. And we love to do that. We got one of the best communities. We got great people. We got great students. We got great coaches. It's just a fun family environment for anybody interested in trading. Also, in about 40 minutes, I will be in the Traders Lounge, which is another thing we do. We get together for about an hour. We sit there and we talk markets. Nothing's off limits. You got questions, we answer them. You want to look at things, we look at things. It's what we do. We get together with our community members and we have some fun. So head on over to Tackle Trading, and we will see you over there.
Awesome. Well, everybody have a great night. We'll see you. I'll see you on Friday in the halftime report, or on Frank's charts over on Twitter tomorrow, except I actually won't see you. You'll see me. So
Right on.